Hey, good morning. Happy Sunday. Happy Mother's Day to all the moms out there. Tim from Alpha Wolf Trading coming at you with something a little different to start off this week's video. I wanted to talk real quickly about something that I received in the mail. It's this Wall Street Daily Investor. And it's, I got this. I thought, oh, this is pretty cool, right? You can, this is a complimentary copy. And, right on the front here, we've got talking about President Trump war on red tape creates surprising biotech investment opportunities, and biotech breakthrough could extend life and disrupt technology and all this other stuff. And as I'm going through it, there's a little article about a legendary financial advisor. Winning never seems to take a holiday. Artificial intelligence breakthrough, and there's all kinds of interesting stuff. And NVDA remains one of the three most solid stocks in the heart of the artificial intelligence megatrend. Mentions Google, and it's got Jeff Bezos and Sergey from Google in here. I mean, all kinds of really interesting stuff, right? Sean Parker, Facebook made Sean Parker. So all kinds of stuff. And really what this is so it mentions Google, NVIDIA, and then this other stock called FRLI, which is a little penny stock. It's a over-the-counter stock, and you got a picture of Jim Cramer in here, all kinds of stuff that could, to the average Joe, you start reading through all this and you go, wow, this FRLI could be this huge, massive, unfollowed, undiscovered opportunity. And they're throwing around names like, Jeff Bezos and NVIDIA and all this other stuff. So what do I do when I get stuff like this? I go to the back. I look at every page, and I'm looking for a little section, and you'll see it here, with really, really, really tiny print. You can't really see it. You can't read it. I can't read it even with my glasses on. So what do I have to do? I have to break out my magnifying glass. Right? So I break out the magnifying glass, and what do I want to know? I want to know, is this a paid advertisement? Enhance public awareness of. So where is it? So what does it say? This is a paid advertisement intended solely for the information and educational purposes, constructed under circumstances as an offer to buy or sell. Okay, so let's see. So this is what they did. Provided advertising agencies with a total budget of approximately $2,183,000, $616,000 to date to cover costs associated with creating, printing, distribution, advertisement, world opportunity investment. FRLI was chosen to be profiled in the advertisement. Okay, so this is a paid advertisement for FRLI. And then, so, look, understand what this is, right? It's getting pumped. This is a paid advertisement right here. So what is the first thing I do? I'm going to show you what I do when I get something like this. Now, the first thing I'm going to do is I'm going to go and check out the I'm going to go check out the stock, see what it looks like, right? So let's take a look at the chart, FRLI. And look, pretty interesting chart, actually. It's had a pretty nice little run recently from 2 to, 266. And look at all this volume that has been coming in out of nowhere, right? So you could look at the chart and go, wow, it's a pretty interesting chart. And looks pretty good. And read all that stuff. It's really fascinating. And then what do I do next? I go to I try to find some financials, right? And I can go over to Seeking Alpha, and I could pull up their 10K. And, as you go through a 10K, this is really quick, right? first of all, let's pull up the key data on this. All right, so this company has, let's see, what, 38 million shares outstanding, and they have total cash of 58 grand. And they're burning through about $1 million. So they have 58 grand, they're burning through $1 million, and it's held by insiders. 67% is held by insiders, right? So if you go over here and then you take a look at their 10K, they have negative operating cash flow and may have negative operating cash flow in future periods. To the extent that the company has negative operating cash flow, the company will need to continue to deploy a portion of its cash reserves to fund such negative operating cash flow. We rely on outside consultants, contractors, manufacturers, suppliers. We rely on experience of outside consultant, contract, manufacturers. Should one or more persons... Oh, wait a minute. That's not what I wanted. Oh, we rely on strategic relationships to promote our products. If we fail, okay, hold on a second. Potential risk of dilution. The company has the right to raise additional capital or incur borrowings from third parties to finance its business. The company may also implement public or private mergers, blah, blah, blah. Their stock is illiquid. I mean, that's one of their risks that they have. It's, our stock has historically limited market. If an active market for a common stock does develop, trading prices may be volatile. Right? So, here it is. Stock is illiquid. At the price of our common stock may be negatively impacted by factors that are unrelated to our operations. So, you're looking at a very illiquid stock. Sales by our shareholders of a substantial number of shares of our common stock in the public market could adversely affect the market price of our common stock. Majority of outstanding shares in the Class B common stock are owned by directors and officers, and if these guys were to start unloading stock, that could obviously impact the stock. So look, bottom line is, what I'm trying to tell you is, if you get something in the mail like this, and then look for that really small print, break out the magnifying glass, and then, look, take a look at the chart. You want to play something like this as a lottery play, instead of going and buying a lottery ticket, you want to buy 100 shares of this with the hopes that maybe it gets a good pump off of this advertisement campaign. Knock yourself out. Just understand what you're getting yourself into. It's a very illiquid stock that doesn't have any cash. They're paying a lot of money to pump their stock. And why are they doing that? Probably to create some volume so that the insiders can unload their stock, right? So, and then somebody's gonna get left holding the bag on this stock. That is my prediction. I'm not saying that it's a fraud. What I'm saying is, this is a very early stage company. It's not NVIDIA. NVIDIA, if we want to take a look at their financials, let's take a look at NVIDIA's financials. NVIDIA has in cash, let's just take a look. So they have $3.74 billion in cash flow. They got $7.4 billion in cash, right? A little bit different from FRLI. But, put it in the same article with FRLI, and it gets the brain thinking all these kind of ridiculous things. Just be careful. Right? I'm not trying to bash FRLI. I'm just saying, if you get something like this, do your due diligence. Do not just go jumping into a stock like that. Okay. interesting week in the markets this week. You know, China stuff. We saw a pullback this week, and you know we have the tariffs that went into effect on Friday. One could say actually that the markets held up much better than I would have anticipated they would with those tariffs going into effect. So, you know, look, I think the markets, we may see some continued weakness over the next couple of weeks, couple of months. It is selling may go away. You know, we're coming up into the summer months. What we may see is some choppy market action and some consolidation, maybe a slight bias, you know, lower. What we don't want to see is, you know, I mean, we could see it. We could see a double bottom test of those December lows. I would not like to see that, but it is possible, right? So we could see things weaken substantially, but for right now, actually the market's held up a bit better than I thought they would. Let's take a look at some individual sectors. IBB, we could be putting in a double bottom. I did find it interesting. As I was going through my scans, I did find some biotech, quite a few biotech stocks actually that held up fairly well on Friday. So some interesting looking charts out there in the biotech space. IWM, you know, we did break below the 50-day moving average, but we managed to reclaim it. So you know, we're holding up, we're consolidating. Yeah, I'm watching it. I'm a little concerned about IWM in the small cap space. We'll see how it plays out next week. IYT also broke below the 50 and the 200-day moving average, managed to reclaim it towards the end of the week. QQQs were pulling back, testing the 50-day. SMH broke below the 50-day, but managed to actually, I think we actually managed to reclaim it and hold on to it on Friday. SMH, semiconductors, you know, 105 area I think needs to act as support for SMH. S&P 500 broke below the 50-day, managed to close back above it on Friday. TVIX, so interesting that, you know, we had a spike in volatility and it really didn't follow through. Got a little bit of a spike and then pulled back on Thursday and Friday. So kind of interesting action there. TZA, you know, one to keep. I mean, look, if we do get a rise in volatility, TVIX is an opportunity for a short-term play. You do not want to chase these things. Quick trades in them. And you know, don't want to hold any size overnight, in my opinion. In TVIX or TZA, they can put a hurting on you. But small caps, if they really do break down, TZA is a vehicle that you can take for a short-term trade. XHB pulling back a little bit to the 50-day. See, actually trying to hold this support there at the 50-day moving average. XLE. You know, I wanted to try and play some energy names. When oil was spiking, energy names just did not move with oil. A little disappointing there, and I think it's a sector that has been underowned and probably will continue to be underowned for a while. Not as exciting to me as it was a couple of weeks ago. Financials actually did okay this week, right? Pulled back to the 200-day, 50-day, held as support. Industrials did break below the 50-day, but trying to hold on to it. Consumer discretionary or consumer staples, one area that's showing continued strength, and that's not a huge surprise. A lot of people consider it an area of potential safety if things fall apart. Healthcare had a nice little bounce back in healthcare. I think there are still some undervalued names there. Much bigger market cap type plays, more long-term hold type plays. Consumer discretionary pulled back to the 50-day, but managed to hold as support. XOP, oil on expiration, kind of looking like a bear flag there. And then retail actually broke down a bit last week, broke through a trend line, broke below the 50-day. Retail not looking all that great, but we do have some retail names reporting this week. We've got Macy's, we've got Walmart, and I think a couple other names reporting. So that is a space to maybe keep an eye on if you like playing the retail space. I'm not a big fan of retail. So so let's take a look at, actually, let me go over to, well, before I do that, let's take a look at T2106, T2108, T2107. So, you know, T2107, T2108, the indicators, stocks, percentage of stocks above the 200-day, over 70, we're overbought, below, 20, we're oversold. But that doesn't mean we can't go significantly lower or significantly higher, right? So we can get into single digits here, and that's when things get really extreme. That's probably when you're looking to load the boat. So we're kind of fiddle in the middle right now. T2107 and T2108 is percentage of stocks over the 40-day moving average, and we're just kind of fiddle in the middle. And we're not overdone to the upside, we're not overdone to the downside. We're just fiddle in the middle. So T2106, McClellan oscillator, indication of fear. You know, we are negative 98, but that is not really significant. You know, when you get into the extremes, the, negative 200s, then, there's some real extreme fear happening out there, and we're not seeing that right now. It's kind of fiddle in the middle. So, let's take a look at the earnings. Hold on a second here. Pull this over here. And I want to bring up last week's stocks to watch for the pro members and how they performed. And, look, NWGI. So I went to a microcap conference here in Las Vegas, saw a couple of small microcap companies present. One of them was NWGI. I did take a little small position in NWGI. I think a couple of other people in Alpha Wolf Trading took a small position as well. Had actually a pretty nice move this week. I wish I would have taken a bigger position in the stock, sub 41% for the week. But it's a very speculative lotto type play for me. I think it's a fascinating company, but a very nice move last week. FRTA reported earnings, building supply company, up 16% for the week. DHX, another one. TLRA, SLGG. Some decent movers, but then on the other side of the spectrum, had some pretty big pullbacks too. Had CPRX, which I liked it because I liked the daily. I was not in the stock, but I liked the daily setup. They had a competitor that got an approved drug, and that thing actually got whacked. Funny thing is, that thing is actually on my list this week because they report earnings this week. So may get a bounce back after this extreme move lower. Just pull this thing up, the chart on this CPRX. Oops. CPRX. So ugly. I mean, it was consolidating right at near the $6 holla. I think that was, let me back this out to the monthly. Yeah, this was approaching an all-time high breakout. That's what had me looking at the stock, and it just got annihilated on this competitor's approval of their drug. They had basically monopoly on the market, right? So that's why this thing got pounded. And it looks to me, I think they report on the 13th, right? So Monday they report. This thing could get a pretty good snapback after the beating that it got. You've got a little bit of a bounce on Friday. Let's see if this thing gets any follow through next week. But so yeah, there were a couple. MGI, is a speculative stock that reported earnings. It had a nice run into earnings. Actually, it's not one that you would have wanted. It would have been great to take some off into earnings. and it got crushed off of their earnings and guidance. All right, so this week we'll take a look at the stocks I've got on watch for earnings. And earnings calendar is actually we've got some good economic data that could impact the markets. Retail sales, industrial production, capacity utilization on Wednesday. Home builders index, right? That will be something that could impact the markets. We got weekly jobless claims, housing starts, building permits, and consumer sentiment index. So there is some data, economic data, that could move the markets this week. And then taking a look at the stocks that are reporting earnings this week, there are actually quite a few, right, to keep an eye on. I think a sector you want to keep an eye on, you have a blockchain event happening in New York this week, so keep an eye on some of the blockchain names. OSTK, which reported earnings last week, had a little bit of a bounce. Riot, blockchain, you know, the other names out there in that space. Keep an eye on that sector. And, you know, Cisco, I think, is an important one reporting this week. John Deere, I think, could be another one that could be interesting. And, you know, I've got a couple of names like Rumble on that I am going to be watching that. I already have a position in Rumble, and I'm probably going to get out of it before they report their earnings, but I will be watching that. And let's take a look at the other earnings stocks that I have on my radar for this week. We'll take a look at the charts. All right, so TLRY is reporting on, let's see, hold on a second. TLRY is reporting Tuesday after the close. You know, I'm watching TLRY not necessarily to trade TLRY. I'm watching it for the entire cannabis space, right? So it did try to bounce a little bit on Friday. Actually, I need to change the candles on this. Did try to bounce a little bit on Friday, and you know, maybe it gets some follow through heading into earnings. It's got the 50-day overhead as potential resistance. Like I said, I'm really interested in their earnings, not so much to play TLRY, but to see how it impacts the whole cannabis space. So TLRY is one that is on my radar. It is in a big downtrend, and you know, if they miss, I could very easily see this thing going back and testing the $31.50 to $32 area as potential price support. ACB is another one that I am watching for the same reason, right? Cannabis space. ACB, I think, could pull back into the 7, you know, between the 6 and 7 range. So keeping an eye on that one. Again, not so much to trade ACB, but maybe to look at how it impacts the cannabis space in general and how those some other stocks react. So I am keeping an eye on ACB. It is consolidating. If it pulls back to the 200-day, could it be interesting for a position, little starter position? Depends on their earnings report and their guidance. Could I see it coming back and maybe testing $4 as a double bottom test? Does it get interesting there? Maybe. Let me see what the sector does this week with these two guys reporting. The other space to keep an eye on, I think, this week is the China space, right? The China names. One stock that actually was trying to hold up fairly well was BILI. And, it's been in consolidation mode. 16 appears to be acting as support. They report on Monday after the close. So, could be interesting to keep an eye on this name for a potential short-term trading opportunity. If it winds up breaking down to $15 or breaks below the 200-day, that could be problematic for BILI. But I think it's worth keeping an eye on that name. AMAT, semiconductor equipment materials, this is a big, thick stock, right? It's got the billion shares in the float. But what I like about it is it's just crossed, you got a 50-day crossing above the 200 days, so you've got a golden cross happening here. It's testing $40, nice round numbers, potential support. I think it's important for the semiconductor space. We'll have to see how it plays out. But this is one to, I think, keep an eye on and see if we can maintain that $40 level. More of a swing or long-term hold type play in AMAT. BABA, which can have some pretty nice wide range days. They're reporting on Wednesday before the open. Of course, we're seeing some weakness in some of those China names. See if this 169 to 165 area can hold as support for BABA. Pull back to 165, 200 day. Could be an interesting spot. More of a swing or long-term hold type play, I think, in BABA. But definitely a name that I'm going to be keeping an eye on for their earnings. NVDA, another one, right, to the big, thick stock. Really, I'm interested in how these guys do more for the overall sector, the semiconductor space. Right now, kind of broke below the 50-day. I think that need to see the what is this? The 160 spot hold as support. If not, potentially, we see a pullback back into the 145 or even the 120. What is that? The 125 area, right? But I think it's important to keep an eye on NVIDIA and see how that impacts the semiconductor space. And the last one is BIDU, right? Another big China name that actually on the daily is in a pretty important spot here, right? I mean, this is a potential double bottom that we've got here on the daily time frame. See if that holds as support. If not, next area of potential price support could be down somewhere in the well, maybe not that far. See some support maybe in the 132 area. But BIDU is another one I think that we need to keep an eye on. So, the for trading opportunities, I think the blockchain space is definitely worth keeping an eye on. I think there are some interesting looking chart setups within the biotech space. I am a little bit concerned about small caps. We'll see how that plays out this week. But I've got a pretty good list of stocks to watch for the pro members, and with some pretty good setups. Got a couple of stocks with some potential catalysts. So I'll be getting that out to you guys in just a little bit. Look, be careful out there, right? Cash is a viable position. You don't need to feel as though you need, you don't need to force any trades. Oh, you know what? I missed one. There is one other one here that is on my radar for earnings, and this is a reverse split, recent reverse split, and that's kind of why it's on my list. LIQT, they just did a reverse split, 1 for 4. Their earnings have been good. And that's why it's had this little run here. Now, this is the weekly time frame. Let's take a look at the daily. These guys report Tuesday before the open, right? So did the reverse split here. Now it's got a super tiny float, 13 million shares in the float. And if they report good earnings, give a good guide, we could see a nice mover on this. Now, potentially, you take a little lotto play into earnings, right? If they have a beat, maybe you get a nice little run out of this thing. If they disappoint, though, you can see a pullback, right? It could be fairly significant because it is such a small float and thinly traded. So keep that in mind. But LIQT is definitely on my radar for a potential day trading opportunity. Either or maybe a high risk swing into earnings, just a little lotto, or a day trading opportunity if they report earnings that are strong, give a good guide, provided it doesn't gap up too much, right? It probably likely will gap up, and we want to keep an eye on that volume. But interesting setup there in LIQT. All right, look, be careful. Like I said, cash is a viable position. Don't chase, don't force any trades. Know your risk reward. Know your time frame. Is it a day trade? Is it a swing trade? Is it a long-term investment? And that's it. Enjoy the rest of your Sunday, and I'll see you all next week.